Welcome back everyone. ARCH Resources and Peabody Energy released earnings this week and results were mixed. BTU and ARCH are the two dominant coal miners in the US and have both had great years to date. Both miners have destroyed the S&P 500. BTU is up over 130%, they more than doubled year to date. And ARCH is up almost 90% year to date. By the way, the S&P is down around 10%. As of this recording, the good news is that both miners reiterated positive guidance for the year. ARCH Resources expects slightly higher volumes than previously announced, combined with higher prices than previously expected, create a positive outlook. BTU also expects good things for themselves and for their investors. BTU expects to deliver more and at a higher price. The consensus outlook is a win for coal companies, and it means higher energy costs for consumers. Please stick around to the end because I need your help. Now for the mixed portion of the bag of results. ARCH Resources released blowout earnings, and BTU did not. The market reacted accordingly. The highlights from ARCH: earnings per share of $12.89, beating consensus estimates by a whopping 32%. Revenues during the quarter were $867.9 million, which beat estimates by over 33%. Basis for these strong performances was high margins fueled by high coal prices. Coal prices have been high for a while now, and in February they went vertical. Additionally, the thermal segment cleared more volume than expected. These cash flows from operations allowed long-term debt to be reduced by over $200 million during the quarter, further strengthening the financial position of ARCH Resources. They have been consistently reducing debt for some time now, and it seems to be paying off with investors. BTU released disappointing earnings of $1.51 per share versus the consensus estimates of $2.16 per share. This was a full 65 cents or 30% below expectations. Revenues missed as well. BTU only realized $691.4 million in revenue. This was 41.8%, meaning almost 42%, less than what was expected by Wall Street. For those of you paying attention, ARCH had more revenue with over $800 million during the quarter. One of the headwinds was $300 million mark-to-market hedging loss, as the unexpectedly high prices caused BTU to run into some margin requirement issues during the quarter. In addition, other weather and non-weather related complication costs were higher, causing earnings and margins to suffer. What's next? If you're getting value, hit like to help me out. As previously stated, both companies reiterated positive guidance based on strong demand and high prices. This will likely ensure that they don't suffer in the short term. In the long term, both companies will need to navigate the complexities of the coal industry, try to find long-term solutions. The good: both companies have been reducing long-term liabilities with their glut of cash. The question: how can they survive the impending death of coal? Let me know if you are interested in more on the future for these two companies in the comments below. And remember to own your investing decisions.